Hi, this is Bill Wood with Disciplined Trading Decisions. Time for the weekend update for the crude oil futures market. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Welcome to the weekend update for Monday, October the 10th, 2016. We're covering the crude oil futures market, so let's take a look at the monthly chart. On the monthly chart, we have lower highs and lower lows. It looks like we had a reversal here. We have a higher low here, but it hasn't broken this higher high yet. On the weekly chart, after this large down move, this could be an ABC pattern, kind of like this, as a correction. Not sure, we'll need more information. You can see that it has respected this Andrews pitchfork, so it may get some resistance up here. And if it breaks out of this area here, this would be a nice, maybe a cup and handle to get you up to your destination. On the daily, we were talking about this area down here as being an area where you may want to get long. And I believe this was the day of the announcement. High volume, big breakout. So if you didn't get in on this day, it's like, okay, you're waiting for your pullback, waiting for your pullback, waiting for your pullback. Didn't really come. So since this day here, we have been one time framing higher, and today was the first time that we actually broke the one time framing higher. In order for this to be a healthy move, there should be a pullback at some time. This may be the beginning of that pullback. So this is a 4-hour chart. The market is always trying to make as many people wrong as it can. So generally, when you have a breakout like this, that breakout generally turns into a channel, and then that channel oftentimes turns into a big trading range. Now, if we want the market, if we're expecting the market to go higher, then that trading range doesn't really play in to my plan. And if it does turn into a trading range, oftentimes it'll come to the bottom of that channel there, the beginning of that channel, so that might be a target. On the 30-minute chart, you can see it's been riding up this Andrews pitchfork. It finally broke down through that center median line, and it got hung up on the 200 period moving average. So if it does continue to pull back, then here is the bottom of that trading range, that channel that I was talking about. That would be all the way down here around 47.12. If this is going to keep going higher, then that may be too far of a pullback. So you have some support here with this Andrews pitchfork line. You have a low volume here, low volume node here, which is around 48, 30 or 40. You have a high volume node here. So you could, between this line, the low volume node and the high volume node, and this low volume node, this could be the area where you find support. But we'll have to wait and see if it even comes down that far. You also have a low volume node right here. So it's healthy to have a pullback. You just don't want the pullback to be too far, that's all. As we open on Monday, the first thing we're going to be watching for is where it opens, okay? Will it open within this distribution or this distribution? Will we have a gap up or will we have a gap down? This is where it closed, so odds are that it will open up somewhere in this distribution. Now, if it does and it tests higher and cannot fill cannot fill these single prints here, then watch out on the downside. If it gets up into this distribution and gets acceptance up here, then the likelihood is that it's going to reach the opposite side, maybe new highs. We have weak highs up here. We have highs that are very close to each other, so that's likely to be revisited, whether it's going to test lower and then get rid of some of these longs, have some longs take some profit, and then on to new highs, or if it pierces the highs and then breaks lower. We'll watch for that. Again, I'll be watching the open. If it gaps open, then if it cannot make it to the previous day's low, then look out to the downside. If it opens in here and cannot fill in these single prints, then look out to the downside. If it makes it into this area here, this distribution here, and gets 2 or 3 30-minute bars in there, then I'd watch out for a new high. On the downside, generally the target is the bottom of this channel. We have a couple of things that may give us support. Number one, low volume node here. That means that prices are considered unfair in this area, so it may reject out of here and go higher. The next area would be this low volume node combined with this trend line combined with this high volume node. So this whole area in here may be an area of support, and then again the bottom of that channel. Well, that's what I have for today. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter if you'd like to have videos like this sent directly to your inbox. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your analysis of the market in order to stay disciplined and true to your plan. Hey, I really appreciate your likes, your comments, and your shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.